Hey, thanks for tuning in. Quick video for you here to see what's going on with the market right now. As you all know, it's all about the rates. And the old rule of thumb that I would have brought up to people was that every $100,000 that you borrow, it's about 425 a month in payment. With the new rates that we have right now, it's looking more like 625 per month for every $100,000 that you borrow. So I have a couple of real world examples here. This is an example from last year. So 2021, buying a $1.5 million house, putting a good down payment down, 800 grand, $700,000 mortgage at 3.5%, which was real common back last year. Property tax, payment, interest, insurance, all that. Monthly payment 4,809 roughly. So what does that look like in 2022 in the last quarter here? Same house, the interest rate, let's say 6.5%, has you at a monthly payment of $6,091 a month, a $1,281 a month increase. Now, for some folks that have great income, that's not going to be an issue. The question is, how many buyers are there out there like that? And what are we actually going to see in the real world? This is a 2018 example of someone that opted to take an ARM, so a 5-year adjustable rate mortgage. So it was fixed for the first 5 years. Typically, folks did this, maybe put a little bit less down. So let's say in this example, 1.5 down payment, 500. They have $1 million mortgage. Maybe they got a 2.25% rate. Their payment during that time was $5,489. The new payment with 6.5 plus interest rate is going to be about 8,300 and change, 2,800 a month more. If you or a family member or friend are in this position and you're getting nervous about it, please reach out. Let's see if we can get something together that would actually work to help you. So what's going to happen this quarter and beyond? I've got this little tug of war image up. This is, I think, what the market's going through right now, where the sellers have been in Disneyland for the last 5, 8, 10 years. And the buyers right now have, some challenges with the rates and affordability. And so the sellers still want that top dollar that they were able to get last year. And unfortunately, a lot of the buyers are saying, hold up, my monthly costs are going to go up if I pay that. And so what we're seeing in the market is, where is this going to land? And let me look at the numbers with you here real quick. In 2021, a $1.5 million house at these various interest rates would give you this monthly payment. Currently, that same house would, with these interest rates, would give you these monthly payments. So the question then is, okay, well, what would a 5% reduction in price do for the monthly payments? So here, a 5% reduction in price would be a new purchase price of $1,425,000. So at 6.5%, your payment would be $5,550 roughly. So really only saving about $500 a month, and still a lot more than what it was going to cost per month last year. So what is it going to be with a 10% price reduction compared to last year? That would be a purchase price of $1,350. At 6.5%, that monthly payment is going to be about $5,000. So still, almost $500 more than it would have been at this, premium 30-year fixed rate from a year ago. So what we're just seeing and feeling right now is where the buyers are, how much are the buyers willing to pay more per month? and how much less are the sellers willing to take in order to get a deal done. It will get hashed out over the next number of months, and it remains to be seen how it ends up. Just for context for you, this is the last 50 years mortgage rates of a 30-year fixed mortgage. The average is 7.76%. And as you can see, we're kind of just approaching that right now. And so what is going to happen down the road? You tell me. Are you thinking about making a decision right now? If you are, please give me a call. I'd love the opportunity to help, and hope to speak to you all soon. Thanks.